supply to the pre-trade demand.
Hey, good morning, traders. This is Art Dill for FuturesTradingCompany.net, and have a nice setup here for a pre-market, pre-open trade. So I've got my order in to sell two emini Dow here at 12,477.
So you got to understand how the order flow is going.
First target of 470, and then 12,467. Second target, which is 1 point above the session low so far today.
That actually represents the demand. It actually represents that the supply actually coming into the market is exceeding that resting demand on the bid. And basically, what that causes is the market to actually move directionally lower. Okay, so it moves lower more directionally. However, we can reach a price where the current resting demand in the market is adequate enough to meet the needs of the aggressive sellers. And it's at this point that the market can stop to move lower. Okay, can stop moving lower and actually pause. So basically, what we're really doing is just understanding how we're reading the order flow on the depth of market to get a better feel for how the footprints are basically created using this information. So now that we understand the order flow a little bit better, let's just look at the summary of all this information and how the footprints can display this. Okay, just to clarify, what actually moves the market is aggressive order flow. Okay, not the passive traders. Okay, it's the actual aggressive order flow. Okay, so basically we can summarize this as the evidence of supply is when the sellers are aggressively hitting the buyer's bid at sequentially lower prices. Okay, this can be displayed in the market order footprints as more volume at the bid, driving down through a sequence of lower prices. Okay, this can be displayed on the market order footprints as more volume at the bid, driving down through a sequence of lower prices. Okay, the evidence of demand is when the buyers are aggressively lifting the seller's offer at sequentially higher prices. Okay, the key word is there is sequentially higher prices. Okay, the evidence for demand is when the buyers are aggressively lifting the seller's offer at sequentially higher prices. This can be displayed on the market order footprints as more volume at the offer, okay, and therefore driving up the price through a sequence of higher prices. Okay, so now that we understand this, we can basically start to look at reading this information on the market order footprints. Okay, what the market order software does, it records the actual orders and the volume per trade filled on the bid and the offer. Okay, and it displays this information in various ways. What we basically look at is the bid and ask footprints and the dollar footprints. That's basically what I generally use in my trading. I use the bid and ask view and I use the delta view. Okay, so just have a quick look at how we break this information down, and we read this off the footprints themselves, and then we'd start to look at some trade setups and have a look at my chart setups. And we'll look through.
We did get short there, and 5:33 Pacific time.
On the footprints themselves.
This is the first trade of the day right here. And I'm going to use my unique 4-bar stop.
Okay, this is an example of what a bid-ask footprint may look like.
So our stop is 482.
Okay, basically, what we have is both a bid and an ask column. Some people like to call it offer. Okay, I like to call it bid and offer.
The entry bar,
just for
and 3 more bars that form.
Okay.
The stop goes, if we're short, goes above the highest of those 4 bars. If we were short, the stop would go below the low of the 4 bars. The entry bar and the 3 next bars that form, that's where we put our stop.
Okay, and what what is displayed
called a 4-bar
within the
stop.
column itself is the actual contracts traded at that price on either the bid or the offer. So most of you guys I know are probably aware of this, real sort of simple stuff, basic stuff, but just want to really break this down for anyone that's not familiar with the market delta software, the bid-ask footprints and the delta footprints, just to sort of break it down just to its simplest form really. So really we've got two columns. We've got the bid on the left and we've got the ask on the right. Okay, the amount of contracts traded on the bid, the amount of contracts traded on the offer are displayed here. Okay, you know, we know that this isn't a real footprint. This is just the sort of textbook example really for the purpose of this presentation. But you know, we can see we traded from 997 here all the way up to 1003, and what you see is that when we have more volume on the offer or the ask, okay, the footprint actually colours this in green. Okay, and when we have more volume on the bid, as we have in the lowest price here of 997, we actually colour this in red. You know, you generally see on a footprint, when you look at it in this view, we'll have 0 on the bid on a high, and we'll have 0 on the offer at a low. I mean, you just got to think about that logically. The reason why that is because on a high, the market generally doesn't go bid. It just goes offer. Okay? And on a low, the market generally doesn't go offer. It only goes bid. So that's why you'll generally see offer, an offer showing 0 and on a low, and the bid showing 0 on a high. Okay, so basically what we can see...
1 point away from a target here now. Need one more point. 470 is what I'm looking for. And I'm filled. Okay, now we bring our stop to break even. Very simple. And I'm only looking for 10 points here. It's pre-market open. I don't want to have a target that breaks the low of the session so far, which is 12,466. So that's why I'm only looking for 10 points on that second contract. And I got that. Very nice pre-market trade, guys.